I am Jesper Hornberg, the CEO of Global Resilience Partnership, and it's great to have you all at the Resilience Hub. If this is the first time, the Resilience Hub is a convening place for different voices that we manage together with Atlantic Council. And this is our 5th year, and we look forward to many more. But it's a platform where we can have different voices, different actors, different private sector, different civil society and so on convene, and that's what we're going to do today. It's quite a diverse room, which is good. This session is about turning a recognition of the need for resilience into action. It's about how the private sector can move from awareness to investment and leadership on climate adaptation. It's a little bit of a question of, are we trying to do damage control, or are we trying to get ahead of the problem so that we can fix it? And private sector is pretty good at getting ahead of problems. We know that the climate impacts are already here, disrupting lives, livelihoods, supply chains, yet adaptation and resilience still only represents a small fraction of global climate finance. If you want the real numbers, there are probably 100 sessions today talking about it. But we need to talk about what we can do. Businesses have both a stake and a powerful role to play in closing this gap by investing in resilience across value chains and in communities, by innovating products and services that help households, farmers, and cities to adapt, and by partnering, because no single company or sector can build resilience alone. Business leadership is essential for scaling climate resilience, and it's not just about risk management, it's about the long-term value creation and shared prosperity, and getting ahead of the problem. Today we'll hear from companies and partners already leading this change, showing that resilience is not only the right thing to do, but also the smart thing to do from a business perspective. So what we have planned for you today, we'll start with an opening perspective from UNICEF on how companies can strengthen community resilience while creating shared value. This will be followed by IFC keynote on private sector leadership in bridging the adaptation finance gap. Then we'll launch the Mobilising Business for Resilience platform, an initiative bringing together 30 companies to unlock $3 billion for resilience by 2030. After that, we will also announce the final list of the Climate Resilience Awards for business that we've organized this year with the World Business Council for Sustainable Development. We're also starting a little bit late, and we were told that we have to finish a little bit early. So Julia here will be really on everyone's timekeeping. Thanks for being part of this effort. I think it's important that we do come together. We hope that you leave today inspired, ready to work together, ready to commit your time and resources in engaging with one another. Because if we don't work together, we won't build the trust necessary to actually move the dial on this. And we need to really move the dial. With that, if I can invite Kitty van der Heijden, the Deputy Executive Director of UNICEF, to deliver the opening remarks, please.
All right, so I don't eat ice cream, and I need to make sure I'm not in the Formula One. I do need to put on my glasses, or I will not be able to read my own notes. And I need to speak in the microphone. Yes, I'm aware. So first of all, thank you all for being here. Not just those of you here online from the Global Resilience Platform, from IFC, WBCSD, also all the folks online. It's a huge pleasure to be here. And if we can't crack the nut, it simply isn't going to happen. Let's be very clear about that. I mean, I've worked in climate science for a long time. I don't think I need to convince you that climate change is happening. I also don't think I need to convince you that climate action, bringing that world of a degree and a half and keeping that within reach simply makes good economic sense. I think, the new climate economy reports, the Stern, we've all done that. Where I think we're falling short as a world community, you guys as business, us as the UN, national governments, is that the truth is that climate change is not just happening, it's impacting lives, livelihoods, your supply chains, your customers, your employees, and we're not acting with the speed required. We're failing, we're falling short. And this is the cup of truth, remember? The cup of truth is that we need to go much faster. We're feeling it, we're seeing it in 190 countries where we are active, that children are suffering because the systems on which they depend, schools, nutrition, health facilities, protection systems, are being impacted by climate change every day. You're feeling it in your business bottom line, but you are not adapting fast enough together with us as an adaptation community to keep not just your employees safe, but to keep communities safe on which you depend for your future. When schools close to floods, for example, or heat waves, parents can't go to the office, right? When crops fail, communities start to move. When fossil fuels are being burned or forests are burned, children get sick with respiratory diseases, so do your employees. So finding ways to adapt and integrate that into what you do is important. We all know how much you stand to lose in business value due to climate change. I remember I was in the supervisory board of Unilever, the Netherlands, and we calculated, and we're talking more than 10 years ago, the impact of climate change on our business bottom line. Because the tea plantations were suffering because of drought, because our employees couldn't come to work because of rural feeder roads being swept away. Our supply chains didn't work anymore. And at that stage, we were talking years ago, it was already at $300 million a year. It has multiplied by, I don't know which factor by now, but it's huge. And so climate adaptation is not just good for you. If we do this in a smart way, bringing in community resilience, it is good for the communities you depend on as well. They're your employees, they are your customers, and we need to bring them into your planning. What I often see in adaptation in business is that they look at it purely from a supply chain perspective. What we're asking you to do as business is to bring in those communities, because if you do not bring in the people on which you depend, it's going to be short-sighted adaptation. The resilience of a business is inseparable from the resilience of the communities that you depend on. And again, it's from your employees to your customers and your supply chain across the board. Our mandate is to protect children. To protect children, not just that they survive, but that they thrive, and to strengthen the systems on which they depend, health, education, nutrition, all of those systems. They're already massively under strain of climate change. Last year, just to give you one statistics, almost 250 million children were unable to go to school because of different climate hazards. We will be launching next year, Q1, the first ever global database on children and climate change, which brings in exposure risks across 10 indicators: heat, dust, flooding, hurricanes, what have you, and overlays that with different typologies of vulnerabilities, health, education, nutrition, at a granular level from 100 meters to 100 meters, and the maximum level is 10 by 10 kilometers. You can start to map where your supply chains, where your employees, where your customers will be at risk, and integrating that will keep not just communities safe, it will keep your business bottom line safe. That is what we are asking you to do. Being cognizant of how much we need to be working together. We cannot do this as a UN. You cannot do this alone. But if we work together, we can actually make that magic happen. So together with BSR, we developed a suite of tools that allow business communities to look at their strategies and integrate adaptation where communities co-benefit. And we've developed a suite of tools, not because it's charity, not because it's nice to have, not because it's a cherry on the cake, because it makes business sense. These tools were developed with business, for business, working with our private sector advisory group, and I know we have Tetra Pak here, we have IKEA here, we have WBCSD, We Mean Business, Iberdrola, ICC, all of them were involved in creating and crafting these tools because they shouldn't work for us, they should work for you. And we can bring in our expertise and make sure that we actually start to accelerate. I want to end by really reinforcing that if the communities you rely on, again, for your supply chain, for your customer base, for your employees base are safe, your business will be safe. If they are resilient, your business model will be resilient. But if they are not, and we do not invest in resilience with a human face, we will all falter as a community. We committed in Paris, we committed in that same year to the SDGs, to the dream of a life in dignity for every child. And the only way we can deliver that is by doing it together, not as an add-on in your CSR program, but integrating that right into your business strategy, into the heart of who you are. And I know we can do it, and these tools that we've developed with you and for you will help you to do just that. So let's make that magic happen, because children depend on it. We depend on you to help us accelerate. This is the COP of truth. We need to adapt to a changing world, and we're going to do that with you and for you. Thank you. And I forgot to say that I have a plane to catch, so I'm going to sneak out of here, and I feel absolutely terrible doing that, because this is probably the most important event for me to really speak about adaptation. There are a lot of people already working on adaptation that know what is required. I think where we haven't had enough dialogue is how we do that with the commercial sector, with the manufacturing sector, with the finance sector, with those that we depend on, that are in the capillaries of society, with your products, with your supply chain, with your employees. So I feel absolutely terrible having to leave you. Don't see this as a lack of commitment. Actually, whether you like it or not, I'm going to come back with a vengeance, because I'm going to talk to you. Have you used the tools? Are they useful? How can we do better? Because that is what we need to talk about. Thank you.
Thank you, Kitty, for that really powerful framing. You've reminded us that resilience isn't just about supply chain risk management, but about people, especially about ensuring communities and children can thrive in the face of climate change. As we've heard, the private sector has both the responsibility and enormous opportunity to drive resilience. But how do we actually mobilize that potential at scale? To help us unpack this, it's my pleasure to invite Veronica Jones, Manager, Sustainable Finance Standards and Capacity Building at the IFC, to deliver our keynote address.
Todo bem? Good morning, everyone. Thank you so much. It's such a pleasure to be here. Keynote sounds a little serious, so that's not how we're going to be this morning. So I just want to ask, who is adapting their clothing for COP this year? Raise your hand if you already feel like you brought the wrong clothes. Okay, thank you. So my job here today, first of all, IFC, in case you don't know, is the private sector arm of the World Bank Group. So our mission is to create more and more resilient jobs on a livable planet. And at IFC, the way we do that is we provide capital. But our capital can only be catalytic to support that growth and change if it also is coupled with credibility by the standards that we support, through capacity building across the entire ecosystem of the private sector and government, and also crowding and others. So that's where we really focus on private capital mobilization, which I think is why we have been invited to this collective and to this partnership. So my task today is to prove to you in a very short amount of time that the private sector cares, that the private sector is self-interested in this space, and that there are a lot of different kinds of activities that the private sector is investing in. But obviously we need to take it to scale, and that's where we need to work with you. So we all know that climate adaptation provides a huge opportunity. You know the risks. I'm not going to talk about them. So the climate adaptation market is expected to grow to 1.3 trillion by 2030, driven both by adopting existing provable approaches like resilient building materials, but also through the scaling and adoption of newer opportunities like weather intelligence. Investment in building climate resilience can deliver benefits equivalent to 150 million jobs by 2050, according to a new World Bank Group report that was literally launched yesterday, a few blocks away, Jobs in a Changing Climate. And that is based on climate and development reports across 93 emerging market economies. So I encourage you to check that out for more data, particularly at the country level. But we will not create those 150 million jobs, which we desperately need given the exponential population growth in emerging markets, without having policies that not only support private capital moving into adaptation, but also the physical movement, adjustment, and adaptation of communities and SMEs and workers. So IFC's approach to adaptation is about climate proofing. So looking at our entire portfolio, all of our clients, and helping them adapt their assets and their portfolio, which is really focused on the risk side, but also making investments in new adaptation technologies, products, and services, which is again on the opportunity side. So IFC is piloting a new adaptation KPI-linked and climate resilience bonds instrument. And we recently published a white paper that explains what those adaptation KPIs are in order to make them more easily useful to other companies, because we all know that this is a nascent market, and part of doing sustainability KPI-linked finance requires some baseline and some existing metrics with credibility. So last year, FY25, IFC delivered $4.3 billion in adaptation finance. Now, this is still scratching the surface, although it was a massive leap from what we delivered the year before, partly because we're also tracking it better. And only 500 million approximately of that was our own account, and then about 3.7 billion was mobilized by other actors. So importantly, very often our role is to make the rest of the private sector feel confident, particularly from outside emerging markets, to be inspired to invest in emerging markets. 57% of that adaptation investment was in Africa, actually. So yesterday, I don't know who, probably many of you were there because you are adaptation champions and advocates, but we announced that IFC joined the Investor Resilience Challenge, which is a coordinating group of a group of DFIs trying to harmonize how we approach adaptation, the frameworks that we use, and also supporting not only adaptation of our investment portfolios, but critically adaptation through our investment portfolios to make the lives of people more resilient. So as we all know, adaptation and resilience is good shared value creation and preservation. And I just want to prove that the private sector, well, a lot of you are here from the private sector, so I look forward to hearing from you. But we're ready and looking forward to ways to invest more. So like Rabobank set up their Acorn model for financing adaptation for carbon markets. And CRDB in Tanzania offers adaptation lending for smallholders. In the infrastructure space, IFC is working with ENGIE, Peru, so it's wonderful to be in the Peru Resilience Hub, to structure a 600 million sustainability-linked loan with climate adaptation KPIs, the first of its kind. And this is innovative because it's helping to address physical climate risk with an adaptation plan that is applicable across all their sites, current and future. And it also provides them with support and an evolving approach so that year on year they keep tracking it and it can evolve. But importantly, this provides an incentive structure in terms of financing rates that is offering them a short-term gain for a long-term investment. Equally exciting is PAC Infra with FCDO and IFC, a blended finance facility in Pakistan, where, as we all know, Pakistan's infrastructure is incredibly vulnerable to flood. And so with support from the UK government, we were able to set up a concessional finance facility of over 100 million euro to scale client adaptation with both investment and advisory support. This is the largest ever single country blended finance facility that globally that either IFC or FCDO has done. And importantly, it's helping to mobilize over 500 million pounds for additional climate smart, resilient investments in Pakistan. And I just wanted to add, while we see blended finance as being critical for the mainstreaming of adaptation finance, we hosted at the MTV Pavilion yesterday a group of asset managers. And one of the things we talked about is, in some cases, blended finance is essential to make cost-effective the most innovative pilots. But they were cautioning us to not overuse blended finance because it really sends a mixed message to the market as to whether or not adaptation investment is commercially viable. And I see some friends nodding and disagreeing here, and I look forward to the lively debate that we're going to have. But what I loved is that 3 asset managers said, we believe that adaptation investment in emerging markets is commercially viable. So please don't consistently send the signal that there is not significant predictable return there. Another innovation of IFC, we have our Building Resilience Index. So we work a lot with developers, real estate, across residential, commercial, hospitals, et cetera. And essentially, this is an IFC-developed online tool that enables developers to plug in certain assumptions and plans and then get a resilience rating that is so credible in the market that based on the resilient rating they receive through BRI, they can get improved access to financing and lower interest rates from banks. We're also seeing that in the built environment, a lot of mortgage takers, homeowners, are defaulting less on their mortgages because they are so committed to the resilient homes and apartments that they're receiving and the efficiencies that they receive also through that resilience. So last example is with QBE Insurance in Marsh, Singapore. We've been working with BRI essentially to go through their portfolio, and this is really helping to attract new kinds of institutional investors to partner with them. So the most critical, which is what we started with UNICEF. People and SMEs are, of course, at the center of everything we do around adaptation and resilience. And even as IFC, when we talk about helping the private sector and large and small firms in emerging markets adapt and become resilient, it is because they are the providers of jobs and they will be the providers of growth. And through them, they are an incredible vehicle to create resilience, not only within their workforce, but in the supply chains that they work with and their surrounding communities. So for example, IFC committed 18 billion last year to trade and supply chain finance. That was a 40% increase from the year before. And essentially, we're designing a new opportunity where we can help small suppliers and medium suppliers to get immediate access to working capital based on the invoice that they receive from a credible off-taker in another part of the globe. So in some cases, we're allowed to now provide working capital to small and medium enterprises in as little as 2 days. And then they have the working capital they need to make investments in resilience and adaptation. I also want to add that we are working closely with our World Bank colleagues and perfect timing, our World Bank colleagues and also CGAP, who many of you may know, to really integrate locally led adaptation processes and instruments and opportunities into these investments. So it's critical we know that anything new that we're going to design, we have to have local communities, local SMEs at the table. We can't design anything without them. And one of the things I'd love to see in the future, speaking personally, not as IFC, is that we find a way to create asset ownership for communities on all of the data that will be required to report on the outcomes related to adaptation finance, because data is gold. And right now, in all of this reporting, most of our SMEs and most of our communities are literally giving that asset away. And I'm looking to all of you to help us think of a way to really shift that power holding opportunity. So I wanted to also end with, we all know that adaptation has to be local. It has to be adapted and bespoke to the local communities and their priorities and their needs. In the world of finance, when we are trying to attract investors from the private sector into this space as well, they also have different risk profiles that they need to meet when they make investments. And so we need to equally think of them like a local community. How can we understand their risk profile and how we design an investment opportunity for them specifically? And we are very hopeful that that will open the floodgates to the adaptation that we all need and know will have high return, both for people and communities and also for the private sector. Thank you so much for bringing us all together today.
Thank you, Veronica, for that inspiring keynote. That brings us to the next part of our session, the launch of Mobilizing Business for Resilience, or MBR, which we are proud to launch in partnership with IFC as our strategic knowledge partner. Through MBR, we are convening leading companies to work together towards mobilizing $3 billion by 2030 to advance adaptation and resilience. This is about transforming how businesses engage with resilience, not only through isolated projects, but also through strategic alliances, shared learning, and investment partnerships that can unlock value across sectors and communities, as we've heard here today. What I find exciting about MBR is how different it is from other initiatives. Because it brings together companies from different sectors with the potential to unlock some really innovative collaboration. So to explore this, we're joined by 8 companies today, driving innovation across different sectors, and 2 discussants who will guide this dialogue. So let's dive into the conversation. It's a pleasure to welcome our panelists. So you can please come to the front here. Nabil Jan Mohammed, Vice President of Data Services at Pula. Liz Henderson, Global Head of Climate Risk Advisory at Aon. Emmanuel Escoto, Manager for Global Cooperation at ASTM International. Rodrigo Fernandez, Director of Sustainability at Bentley Systems. Chris Adamo, Director of Global Sustainability Impact and B Corp at Danone. And we had a representative from LinkedIn who might still come, but he came by earlier and he was called to another meeting with one of their founders. He asked us to confirm that their support. So we'll have Anuja Jaitley, Head of Global Partnerships at Blue Marble, and David Nicholson, Chief Climate Officer at Mercy Corps. And we're fortunate to have 2 distinguished discussants, Helga Flores Trejo, Vice President and Special Envoy for Sustainability and Multilateral Affairs at Bayer, and Juan Pablo Hofmeister, Senior Climate Change Specialist at the Global Environment Facility, the GEF. So Helga and Juan Pablo will lead the conversation, asking questions to our panelists to uncover what's working, what's missing, and how MBR can help accelerate action. I'll help us stay on time. And Helga will get started.
Okay, thanks, Julia. First of all, after hearing Veronica talking about how the private sector cares and sees this as an opportunity, it's extremely encouraging indeed to see all these companies here at the table. Now, what we want to do in this very short and crispy round that we're going to do is exactly to talk about the concrete. We know the what, and the question now here is how we do it. Where is the opportunity, how you are advancing it, and what are the things, the challenges that you are encountering that are stopping you? So in the first round, I want to talk exactly about that. The mindset change that we are having when we go from risk thinking, when it comes to resilience, investments, to the opportunity. So Liz, I want to start with you because Aon addresses exactly through that climate change, through data, through analytics, and offers these to partners to help them understand exactly and to manage that climate change risks. So the question for you is, what is holding back? What is it that you're seeing? What are the main challenges holding back private sector when it comes to doing these investments? Thanks.
Thank you, and really excited to be here and be part of this panel with all of you guys. Staying committed to resilience, being in the insurance sector, so Aon is a global insurance brokerage. So we work with clients across every sector, across 120 different countries, to help bring risk capital for hurricanes, for tornadoes, for all of these different climate events. And so it's so important for us as an industry to be thinking about how we're supporting investments into areas that are most exposed to climate risk. because we pay the claims when these events happen. Since the year 2000, the industry's paid out $2.5 trillion in claims due to natural disasters. 8 out of the last 10 years have been above the long-term average. And we see in all of our data and analytics that the risk landscape is changing. Climate change and carbon in the atmosphere is having an effect on the frequency and severity of events as they occur. Population is increasing in urban centers, making bigger, more dense targets when these events happen. And the vulnerability, the built environment, and the infrastructure that we have is not able to withstand that increasing risk. And so from our sector, we want to see way more investment into that infrastructure, into that built environment in order to reduce the losses and improve outcomes when the events do occur. The barrier to that, I think, it's not that we don't have the data. In the insurance sector, we do have very sophisticated models and lots of historical information to tell us exactly how do we invest to reduce risk. I think the biggest barrier is the disconnect between insurance, who has this exposure, not always being at the forefront of conversations with city leaders, with investors, with business owners, before they're making the investments into their business. And so we don't often have an opportunity to share that insight, to tell people, don't build in this area. If you build in this area, build it to this standard, because that will maintain access to insurance over the long run. So it's bringing together that conversation to the forefront of decision making and collaboration across investing and insuring that I think is the biggest barrier. But it's at events like this and in platforms like what we're putting together today that will really help to break that down.
Thanks. So in a shell, it's connecting the dots of the different. Thanks so much. I want to turn to Chris and Danone. And of course, also following Veronica, when I think, when I hear very often adaptation and all these code words, I want to make sure that we realize that it's really about something very basic, because for me where is our food going to come from in 2050? That's the question that we're discussing here. And I am convinced that the companies that are able to offer those solutions for us to grow food in 2050 are the ones that are going to making big profits and are the ones to move ahead. So Danone, of course, in Danone, your supply chain depends exactly a lot about on climate. Okay. Oh, I guess I didn't get the memo very well. Sorry about that. Closer. Okay. So in order for you to turn that opportunity, that risk into opportunity when you think about your supply chain, farmers, what are the kinds of incentives or how you are motivating them so that they can indeed embed adaptation from the beginning into their operations? And similar, how do you talk to your investors about this?
No, thank you. And for those of you who don't know Danone, we are a global food company. So we make a variety of different products. Dairy is by far and away our largest commodity and most important commodity. Fresh yogurt, specialized nutrition products, for example. So when we think about it, it's been very acute for a number of years that this adaptation and resilience risk, it's been quite evident, obviously. It's a super acute thing when you look at agriculture. You look at productivity and you look at water. I'm sure there's a variety of other factors as well you can get more complex about, but at a very simple level, it's can those producers continue to produce at a level that's profitable for them, that is assures us of the continuity of our business, and then what are the factors around, such as water, that are the huge risks. So the risk has been identified in most cases. We're still doing those kinds of assessments to better understand it in many geographies, but now to your point, what do we do about that risk, right? What do we put into action? And so for us, some of the challenges are, these are tens of thousands of small businesses across the world, some of them very small, many smallholders in North Africa, India, West Africa, for example, but even larger, more mature farms, perhaps in Europe and North America, still face similar challenges. So for us, incentives are important, but we have to think even bigger and more comprehensive than that. For us, this is a very intensive procurement strategy. It's not a passive buyer procurement strategy. We have to think about being very engaged with those communities, what was said earlier, we have to think about the people, we have to think about the farming communities. This can't just be about sending a signal down the supply chain. We have to actively engage with these farms. So a couple of different things that we think about. Yes, incentives are key, but we need technical assistance and training. Without that, sometimes the incentives can't be put to use. The financing can't be put to use as well as we can. We need to think about infrastructure. This is often forgotten about a lot of times in agricultural systems. The infrastructure on the farm, such as a tractor, such as a different planting system, such as irrigation. But also with milk, where does that milk go to be chilled so quality stays high? Can these smallholders have a community collection center? This is something we've seen in many geographies that is very successful. Someone needs to pay for that infrastructure. Someone needs to keep it running. But that's a community investment at the end of the day. We also think about gender. More and more we're seeing, and we have good data behind this now that we've put a lot of effort into the past couple of years, if we don't think about gender, we're leaving off half the farm that's doing half of the work. We see this in North Africa where women are doing most of the animal care. They're doing the milking, they're doing all the things related to making sure that that cow is in good health and in good condition so that it can produce well. So if they're not coming to the trainings, and if we're not setting up trainings that those women can come to and feel comfortable coming to, then we're missing out on educating half the farm. And that's a huge barrier, but also a huge opportunity. So in places like Morocco, for example, where, by the way, Morocco for us as a global dairy company, it's our third largest milk volume by country in the world, which sometimes surprises people. The United States is big, France is big, but Morocco is a very big dairy culture and super important to local nutrition there. 30,000 plus smallholders supplying us milk in Morocco. We have to do the training by community. We have to think about gender. We have to think about the infrastructure. All of this can build towards better resilience, better adaptation activities. But if we don't think about it as a package, then the incentives of them by themselves most often won't work.
Thanks so much, because I think it's extremely interesting what you said. You have to be active and maybe do things that a company never thought of doing before, capacity building, right? Here, I think, is exactly collaboration with World Bank Group and other development agencies, and I think you're working on that. Okay, for the next round, I'm going to give the word to Juan Pablo from the Global Environmental Facility.
Thank you very much, and let's see if I pass the test of being listened. That's that better? Excellent, thank you very much. Good morning, and I think really building on this last reflection and this last comment, I like to sort of turn a little bit more to technology and innovation as enablers. And I think from this last reflection from Danone, we sort of hear very clearly none of these things work in isolation, none of these things work as a silver bullet. So as we move our work and try to focus on infrastructure, innovation, understanding how we provide access to solutions, including insurance, scaling impact through technology, I like to turn to Rodrigo and hear from you. Bentley Digital and your spatial tools have transformed how we are planning infrastructure. And what are the kind of partnerships and policies that you think are needed to make climate resilient design the new normal?
Good morning, everyone. So it's a pleasure to be here and an honor to be here. Okay, so let me just step back. So you all guys have a favorite movie, right? I also have a favorite movie, which is The Matrix. And I tend to think about infrastructure as the invisible matrix of the physical world. Every road, pipe, or wire, it's like a line of code that shapes how the society and the population is sustained and maintained, right? And we want to crack the matrix. We want to understand this interconnectivity and to ensure that we recover and that we adapt when there's any bug in this matrix, right? So that's what we try to do, right? So Bentley Systems is the leading software company for all types of infrastructure in every life cycle stage. And we do believe, and we understand that the only way to address this is not only focusing on ourselves. We have to focus on ecosystems. We have to focus on on supporting the supply chains in a way that we can solve this, correct these metrics. I think one key point, one key problem that we see is that in many cases they don't speak the same language. The organizations, they don't speak the same language, but even before that, they don't know, they are not aware of the problems that really affect their supply chains. First, they need to identify, I think the best way is exactly to connect the dots, put them in a table, in a discussion table, finding out what are the critical aspects that need to be identified and measured, so that you can then manage, a critical hub in a way that is sustainable and adaptive. That's one point. Once you identify that, you want to share it and you want to communicate and have all the stakeholders involved in that supply chain informed. So you need open data, you need open standards, and protecting sensitive commercial information. You can still have standards and open data and API. And we work a lot on that. We try to incentivize this open data. That's part of our mission and purpose with our digital twin platform. And then when you identify that, when you facilitate interoperability and sharing the information, we also believe that you need to find ways that information becomes visible, communicated to the right decision makers. And so you need platforms to do, you need collaborations like this. We are also proud that last week we announced Bentley Ecosystem Catalog, which is exactly to create a marketplace around the infrastructure sector where any stakeholder can go there and finding out what are the technologies, the services, the data, and the information that can be used for cracking the matrix, right? And tomorrow we will be presenting some of the key organizations that are working in this ecosystem with us. So really proud to do this. We do really need to connect the dots, and we think that this goes cross-sectoral, not only in specific sectors, but everything is connected, right? For instance, and just to say, I was not aware that a big power outage in Portugal, where I came from, would affect my cell phone when I was in London, because the mother company is in Portugal, so roaming was not working there, and so I was not able to communicate. So communications were affected in London because of a power outage in Portugal and Spain. So.
No, thank you so much. And one point I definitely like to underscore there is that none of this has any value unless we actually share these insights, unless we all learn from each other, and that's why I remain so thankful for spaces like this and for the work that the Resilience Hub is trying to do in creating that space. Anuja, let me turn to you. Blue Marble has pioneered climate smart insurance. Going back to this theme of technology and data sharing, how can we extend that protection to smallholders and informal economy?
Thank you, and very happy to be here with all of your panelists and you. Thank you for organizing. Blue Marble, for those of you who aren't aware, is a consortium of leading insurance organizations. And we come together to design customized parametric or climate-related insurance specifically for the underserved market. And so given this work, our core approach is to sort of design very customized, specific climate products. And data and technology is really at the center of that. The way we design, we're using climate data, satellite data, and our proprietary software system. So one of the key things that we're looking for is more granular data. The more granular the data, the more we can capture microclimates. We can work in communities that are hilly in nature and have very specific things on one side of the hill versus another side of the hill. So that granularity really helps us to design products that are much more valuable to beneficiaries, whether they be smallholder farmers or informal economies. Another area that we're really looking for is timeliness of data. The quicker we get that data from open source data sets that we use, the more quickly we can make payouts. There's a direct link between that and getting those funds to that smallholder farmer so they can reinvest in their farm, or getting that to an informal worker in the event of a heat wave. Those are key moments of real value to those communities in building adaptation and resilience. Maybe The other thing I would share is maybe as an example, right? We work with Nestle on their supply chain, right? They're coffee farmers and how those beans are being transported and developed in various markets around the world. We also develop products like extreme heat insurance for informal women workers in India. And when we think about either one of those examples, however different they are, the more granular the data and the quicker we can provide a payout, the more quickly we can provide real resilience and adaptation in any of those contexts. So thank you.
Thank you very much. That's fascinating. And I think before I turn it past to Helga, just a couple of reflections. First of all, I'm definitely taking from this session today the correct the matrix call that we heard. But more than that, I think that correction certainly comes around sort of trying to promote systems thinking, trying to ensure that, as was said, that we connect the dots. But not just that, to make sure that more than dots, we make sure that this granularity in data is actually responsive to the most vulnerable under needs. And for that, I really appreciate the work that you're doing. Helga, let me pass it back to you.
Okay, in the next round, now we want to talk about people, about the resilience impact in communities. And this is what I am extremely interested to hearing about from Pula. And Nabil, before I ask you a question, let me just say in the context of their work that we know well in Bayer since we partner with them, just the relevance. Imagine a smallholder in Zambia. They had a terrible drought. After losing all their harvest, how do you think they would? What do you think they will decide? Would they go and plant again, or leave their land? How would you encourage them to continue as they see more and more of these climate events making their lives completely difficult? And this is where the question of crop insurance can make completely the difference between a smallholder planting again or leaving their land. So Nabil, Pula is working in Africa with smallholders and providing them exactly that, crop insurance and data to guide them in their endeavors. So from what you've been doing, could you tell us a little bit what would you need from governments and investors to expand your model to reach much more of those smallholders?
Yeah, thank you. Thank you for this. So just to give you a little bit of context on what we do, especially on how we reach these millions of farmers, we've been working for the past 2 years on a specific project related to the EU deforestation regulation. And the idea here is basically the coffee that you're drinking here or the chocolate that you're eating needs to come from basically non-deforested land, right? And for us to get that data, the regulation requires you to actually go to the farm and map that farmer and collect their GPS coordinates, right? Or just get the polygon of that farm. Now, we've done quite a bit of work in Uganda. Uganda is the 7th largest exporter of coffee in the world, right? And when we started in 2023 trying to map these farms, the Uganda government was really trying to work hard to make these coffee farmers compliant, because if they do not make them compliant, they cannot export their coffee to Europe, right? Or they export it to other countries that demand a lower price. So it really affects the GDP of the country, and it affects the farmers' income. Now, we went through multiple districts, 126 districts in Uganda, and now have mapped around 1.7 million farms, right? And this is just 45% of the total farms that are in Uganda, right? Now, when exporters like Sukafina or Volcafe or Newman Cafe Group export this coffee, they need to attach these GPS points to the roasters so that they can show that this coffee has come from traceable locations, right? And now what we are doing is we have basically a simple WhatsApp tool where a farmer can buy from a trader and a trader can buy from a farmer, and payment trails are integrated into that because they're already digitized. So to answer your question, I think the biggest problem we are having in Africa, even if you do any value you're offering to a farmer, needs to have a foundation. And that foundation is missing in quite a bit of African countries. And what is that foundation? Is the digital public infrastructure, right? That's why you're seeing a lot of discussion on digital public infrastructure. Without solid data, without digitizing your farmers, you can forget about doing basically insurance at scale. You can forget about access to finance at scale. Now when farmers are trading on this, let's say, WhatsApp tool, you can see that they have a transaction history, right? And this transaction history is on mobile money. Now they can have a conversation with the banks and say, look, I am bankable. I can go to the bank and say, I have this transaction history. I sell my coffee to this cooperative. This is my monthly income, right? And so without that digitization, I think it becomes a bit of a problem. So in Uganda, the project was divided into two. The first one was to map the first 1 million farmers. The other one was to map another 750,000 farmers. To map the 1 million farmers, it was actually the Danish government that funded it. So we got some investment from donors, and that investment catalyzed the government to invest more to register the 750,000 farmers. And now that the government knows that there are actually more than 1.75 million farmers, they're adding more investment to go and map these farmers and build that digital infrastructure. So what we need from governments and basically donor institutions and investors is help us build that digital public infrastructure foundation, right? There's no point trying to offer value with insurance or access to finance. If you don't have that foundation, it will not work, it will not scale. So I think we need to have that as a foundation for Africa, build the digital public infrastructure first, then build all the value chain that you want to do. So that's what I would say. Thanks.
Thanks so much. Let me, in this round, just come now to a different actor here, which we've talked about from the beginning, which is an investor. In this case, David from Mercy Corps Ventures, because you are indeed investing in that early stage resilience ventures. And from your perspective, from what you have seen, what would help us to attract more of those investments into resilience? And again, making sure that what we are doing is showcasing the opportunity rather than the risk.
Yeah, thank you. This heat's really testing my resilience. So yeah, we're a bit of an outlier here because Mercy Corps, of course, is a non-profit that seeks to build community resilience globally in highly vulnerable places. But Mercy Corps Ventures is the impact investor arm of Mercy Corps. And through that, we have a venture fund that invests in early stage ventures. We come in as an equity investor for early stage ventures that we think have a high potential for adaptation and resilience outcomes in the communities that we work in. We're able to do that because we can blend public and philanthropic capital with return-seeking money in ways that allows us to be very risk-forward and very impact-forward and sort of catalyze money to come in. So to date, just to give you a sense of scale, we've made 65 investments globally over the last 7 years. With that, we've managed to help catalyze another $500 million in follow-on investment. Now, obviously, those companies deserve most of the credit for that, but we play that small catalytic role early in that process. So we've learned a lot about what works. And I'll say a couple of things that would help scale this more. I think, first of all, and I will defer to Veronica from the IFC around when to use blended and when not to use blended across the finance system as a whole. But I will say that in sort of frontier markets where we're looking at early stage ventures, this blend is really important. Sometimes people look at the results that funds like ours have had and said, oh, cool, the market's working. We don't need the catalytic capital anymore. That's exactly the wrong lesson. We need the public and philanthropic money to keep coming in and saying, we will provide that early risk coverage to encourage the money to come in. And there's never going to be too much of that catalytic money, right? So that's really, really important that story is maintained. And the likes of us and our ventures, and Pula is a great example of a success story to say when we get that blend right early, the money will flow and businesses can scale. So that's one really important piece of this, to keep that narrative really clear and keep sharing that lesson. That takes courage from philanthropy and public sector sources. It also takes sort of investors, return-seeking investors, to do a little bit of work to bridge that gap between perceived risk and real risk. people see the sorts of frontier markets we work in and assume the risk is higher than it really is, and taking the time to do that, to really investigate the real risk. And that brings me on to my second point, which is sort of real being embedded in the locations we're making investments. So you can understand who are the entrepreneurs, what is the pipeline, supporting that pipeline. There's a lot of money that has to come in early to help test. We have our own venture lab that works with emerging businesses to test business solutions before they're investor ready. Get that pipeline moving, and then really do the work to understand what the real level of risk is, and engage funders early so they can get to know these businesses. That also takes subsidy, right? And that's why we do a lot of work on that early testing, building a coalition of support around some of these business solutions so that we can attract that private capital in as early as possible.
Thanks so much. Before passing the mic to Juan Pablo, from my side, what I really hear from you in this round so far is how important was data and advice. On the other hand, companies that get out of their comfort zones to realize the opportunity, not wait for it. Government action in key infrastructure. And from the investor side, understanding really those communities is essential. It won't come just by being far away, but the opportunity is there. So thank you from my side, and Juan Pablo.
Thank you very much. And let me just sort of reflecting as well on the conversation so far. And one of the issues that, if you hear in the corridors, is picking up a lot of attention, of course, is the question of just transition. Of course, how this just transition applies to the discussion of adaptation, that is in itself a separate conversation. But regardless, issues of skills and standards are quite central to that conversation. And so with that, I'd like to turn to Emmanuel to hear a little bit how ASTM International drives standards. And how are you in... Oh, sorry. Oh, thank you. Sorry about that. How are you embedding climate resilience into global standards? And most importantly, what gaps do you see remaining?
Thank you for the opportunity to be here and talking to every one of you. For those that do not know ASTM International, ASTM is a global international standards development organization. We have 34,000 volunteers, scientific and business people from around the world. We welcome everyone to our table, to the tables for discussions. Don't think at ASTM there are technical conversations happening every day, and actually all the topics that you are discussing today, adaptation, language, data, infrastructure, water, all of those topics we are touching. Just touching about water, we have 600 standards that bring solutions to the community for water resilience issues. Or if we want to have a common language, ASTM has standards that bring together the communities to talk the same language and to understand each other's, what it means to be resilient, what it means to have adaptations, and what it brings, how to bring solutions. And for those of you that think that you cannot join these technical tables, let me tell you that ASTM welcome every one of you, all small, big business, people, corporation, users, producers, all of you are welcome to our table. So please join us and come to ASTM. What we do actually is that we provide the services. We have a Memorandum of Understanding program that we help MOU partners from around the world to access to this standard, to adopt these standards as a solution, and to adopt in their own terms and languages. So helping them understand, have training, capacity building opportunities, and even to join the tables for the conversations. That's what we do. And if we talk about resilience, for example, we have been talking about climate justice and community. We have standards that bring together the community, that tackle those issues that the community need to understand, or we have a standard to evaluate the property resilience in the infrastructures to understand how they can better apply or what improvement they need to do in the infrastructures. Thank you.
Thank you so much. And this very much echoes a lot of what our keynote had said a few minutes ago. So thank you. I'd like to turn to Efrem. Welcome. And hear a little bit more how the LinkedIn data shows how adaptation and resilience skills are growing rapidly. What partnerships are needed to build a resilience-ready workforce?
It's great to be here. I think, as you've heard everyone speak, one thing that I hear is someone's job has to be done differently to do everything, whether it's deploying insurance, deploying new standards, investing in new investment vehicles to invest in developing economies. Someone's job has to be done differently. And what we see, LinkedIn, all of you are on it. You're all on your phones posting about how great it is, how hot it is here, whatever you're doing. And what we see with you and 1.2 billion of your friends is all of the ways that the world of work is changing. And that's really when we think about climate change, like AI, is a big trend impacting the world of work. And most of the attention when we think about how jobs are changing in climate goes to mitigation. How are jobs changing to reduce emissions? But we also see very clearly in our data is that adaptation is driving a lot of the way jobs are changing. It's we heard about Nestle, and we can think about McCormick, the spice company. If you're in supply chain management right now, you have to think about resilience in your supply chain. You have to think about how it is that you build the capacity of your suppliers to ensure that they are producing products in crops so you can put product on the shelves. If you're any company that has physical real estate, that you have to think about how it is that you're going to maintain that real estate in the face of stronger and more frequent climate-induced natural disaster. I've heard a lot of conversations just around heat, and of course we're all thinking about that front and center here. I was talking to an insurer who said when they go advise companies about risk profile, one of the risks they have to think about is, are our workers going to be more exposed to heat? And how do you change the way that as a construction company you might operate so that you're able to continue to do your work when it's the case that it's going to be hotter earlier in the day? And all it is to say, everything when it comes to this and why it's so important that businesses are involved is because where is it that most people learn skills? People learn skills in the context of the jobs they have right now. They learn skills in the context of their employers. So when you're asking about what are the partnerships that we need, it's about how do you help employers understand the risks that they face across multiple facets of their operations and make sure that the workers in those roles are the ones who are developing the right skills. Too often, I think in the corporate context, we've thought about this as something that the sustainability team has to think about. That's not the team that's going to be actually deploying and building this into operations. It's people on the front lines. One example we've actually talked a lot about are with insurance companies. And what's really interesting about insurance, so finance is one of the sectors with the lowest concentration of green skills, but it's got one of the fastest growing in terms of share of green hires. And one of the key contributors to that is that the insurance industry is having to hire new types of workers. Alongside their actuaries and modelers, they're hiring climate scientists and meteorologists to help them model what this risk looks like. And I think you heard so much of that from the Blue Marble story, but how you take new types of data and use that to build risk models and payout models. So at the end of the day, this is going to create a lot of jobs. It's going to change even more. And I think it's about how do you find partnerships between groups like the Global Resilience Partnership and companies and governments to help make sure workers have those skills.
Thank you very much. And two top messages I then take from both you, Emmanuel, and Efrem is, first of all, that we need to make this transition accessible. We need to make sure that the solutions for them to be replicated need to be accessible, and that the transformation of the workforce, that transition is happening. And the forefront is perhaps not where we understand it, so we need to reframe that thinking a little bit more. So thank you so much to all our panelists. I'm going to turn it back to Julia.
Thank you, Juan Pablo and Helga, for guiding this really exciting conversation. We're going to have to wrap up the panel because we can't run past our time for this session. What we heard is clear. I think we need to scale collaboration. And now that we've sweat together here, I'm really positive about MBR. I think like, we can really, I'm really confident about our collaboration moving forward. And that's exactly what MBR is here to do in partnership with IFC and with each of you. So thank you to our panelists and discussants. Let's keep the momentum going then as we move to another part of our session to celebrate innovation through the Climate Resilience Awards for Business, an initiative that the Global Resilience Partnership and World Business Council for Sustainable Development developed this year.
No. Hello, everybody. It's wonderful to be here. I'm Jenny Dodson. I'm Senior Director for Policy and Advocacy. Delighted to be here with Jesper from the Global Resilience Partnership. And yes, congratulations for being so resilient. I think we're all seeing that we don't want to have greater heat impacts around the world. So in September, WBCSD and the Global Resilience Partnership announced that we are running our first Climate Resilience Awards for Business to support the COP30 action agenda and the presidency's ambitions to make this the COP for progressing adaptation and resilience implementation. And the purpose of these awards are to recognise innovative solutions that strengthen resilience, to promote collaboration between actors, to showcase real examples that inspire others. And I think this is absolutely critical for this COP, so I'm so excited that here, right now, we're celebrating real examples of action and implementation. The response to the first awards were beyond our expectations. We received 140 submissions from 45 countries covering more than 30 sectors. This diversity demonstrates global momentum to address climate risks with practical, inclusive and scalable solutions. And the submissions, I really recommend that you look into these further. They're informative and inspiring, demonstrating how interconnected a broad range of environmental and social issues are with adaptation and resilience, and demonstrating that if we address adaptation and resilience issues such as plastic waste and invasive species, we can also reduce emissions, improve soil quality and prevent flooding. So from these many submissions, we've shortlisted just over 20 companies and selected winners and runners-up from across 7 categories. We are going to announce the awards now. I do encourage all of the recipients to come up, to stay at the end, where we'll take a photo to recognise and celebrate all of them. So delighted to announce the first winner of the award for strategic leadership and technical innovation. And this is Google for its AI-powered global flood forecasting that provides free riverine warnings up to 7 days in advance. Perhaps we could give a little congratulations to Google. And here we have a brief overview of the project. This forecasting tool improves the reliability of flood forecasting, as well as covering data-scarce regions. And early warnings are critical for preventing loss of life. So congratulations and thank you to Google for that work. Now in the same category, but for a small and medium-sized enterprise, the winner of this award is Wave Save, Slam Dam BV, and I love that name. Yeah. Woo! And this is for their modular reusable barriers that protect against floods and store water for irrigation and drinking. And what impressed us, in addition to its dual purpose function, is that it is relatively low cost, that can be flexibly deployed and used by businesses, government and aid agencies alike. So thank you to WaveSave and congratulations as well. So I'm going to hand over to Jesper for the next category.
Thank you. Yes. Next category, strategic leadership, innovative methodology or approach. So this category is for companies that are trialing new approaches to traditional methods, for example, in farming, perhaps in combination with digital tools, or a new way of doing business that integrates adaptation and resilience. And the winner for this category is CP Group for its methane reduction and soil carbon sequestration in paddy farms projects. And a winner in innovative methodology or approach overview. What we liked about this project is that it applied the alternative wetting and drying technique to reduce water use by 1/3. which is a pretty big impact, with digital planning and monitoring tools that can generate carbon credits to support farmers' income. So congratulations. Same category, but for an SME, the winner of the SME subcategory for innovative approaches is Build Up Nepal, for its capacity building program to support local micro-entrepreneurs in producing interlocking eco-bricks using locally available materials. So congratulations. And then I'm handing back to you.
Okay, and the next one, moving into innovative financing mechanisms. We're well aware of the importance of financing to scale adaptation, which has proven particularly challenging, especially private sector financing, and I think we heard some of that in the earlier panel. We have two great examples, but I'm delighted to announce that the first winner is Standard Chartered Bank, who use their cross-border expertise to provide bank guarantees for exports of climate-resilient solar power technologies to climate-vulnerable regions. So well done, Standard Chartered Bank. And this is the first labelled adaptation deal for Standard Chartered, establishing adaptation finance as an investable asset class with potential to be replicated across the bank and elsewhere. So I think something there that could really catalyse and stimulate a lot of financing. And in the same category for an SME, we have two examples of microfinance directly benefiting farmers, especially through digital tools, with both great examples, but we have selected Vermifarm Initiative as the winner for their village bank in a box model. This is a highly replicable modular solution combining multiple types of support, including microloans, weather-indexed insurance, which can still work in low connectivity settings. So congratulations, Vermifarm. And back to Jesper.
Thank you. You really are great sports. It's so hot, and then we ask you to actually move, you know? So like light exercise, it's fantastic. As we are in Brazil, we want to also recognize the efforts of local and international companies working in the region to protect local ecosystems and improve resilience for local communities. So we have an award category called COP30 Regional Award. And this award goes to Solos for supporting marginalized women waste pickers, formalizing their role in the economy through corporate recycling partnerships. Improper waste disposal can exacerbate climate risks and impacts such as flooding and disease. This project is also very scalable and female-led, so congratulations to Solos. Great. Those are all the winners. While we congratulate all the winners, we would also really like to thank all the companies who participated. I mean, 140 applications. We do recognize and acknowledge that's a lot of time spent. And it's good that you did it. Mic closer. Okay, thank you. Such a bossy AV. So thank you. And we would really encourage everyone to do the same thing next time. Innovation builds on innovation. New thinking builds on new thinking and new partnerships. So this is a way to highlight that. And it's a real honor to be working with you on this. Thank you. Could I ask the finalists who are in the room to come up so that we can take a picture?